Hi, this is Daniel Rowe with TradeThePlan.com. It's May 24th, 2022. It's 2:40 p.m. right now, Central Time. I wanted to make this video real quick and just do an update about the recent sell-off over the past 4 months, 5 months this year in the US stock markets. So as of yesterday or Friday maybe, we've hit the bottom of this really big uptrend channel. This is exactly the spot that I've been waiting to get to before anticipating a move back to the upside. If it is going to go back up to new highs above 5,000 for the S&P 500, this is very likely the major low from which it's going to turn back up. The markets tend to trace out these kind of geometric patterns within trend channels and median lines. And as far as, all the methods that I've tested and traded using trend channels and median lines with some use of, retracements, Fibonacci retracements, extensions, confluence zones, there really is no other support and resistance method that works even remotely as well and across all time frames. So the area that we've come down to, this is the the S&P 500 continuous contract. So it's ES pound pound dash pound pound. And the way that I set up my data feed for Kinetic is to get non-back adjusted data for the continuous contracts. So when you uncheck this box, the continuous contracts will use non-back adjusted data. And on this non-back adjusted data continuous contract, the low that we've recently had over the past, I guess it was Friday actually, is right at this, it's right at 3,800 even just about. And this 38.2% retracement of the most recent, basically a straight shot swing high on the weekly chart that subdivides into 5 waves. And that's the thing that's making me kind of question whether or not this is going to break down and out of this channel and just keep on coming down. The fact that it has traced out what looks to be a completed set of 5 waves to the upside. So that's the only thing that I'm reluctant about saying, with confidence that this is the low. But if it's going to turn back up to new highs, this is the place from which it'll do that. I'm fairly confident about that, as that's what we see over and over and over, these types of patterns. And what we're looking for, the way that we trade, is we're looking for a confluence of a larger channel or set of median lines sloping within the direction of the trade, and then a smaller channel, preferably a smaller channel sloping against. It's not absolutely required because not every corrective pattern will trace out a perfect channel, especially when it's an expanded flat, when this B wave goes back above the starting point of the A wave. This is actually, I think, a WXY, but whatever, that's beside the point. So the fact that this has traced out these beautiful channels and it's actually broken through the bottom and thrown over the bottom of this downsloping channel right perfectly into that lower channel line from the big upsloping channel, that's really about as pretty as you can ever expect or hope to see. And right at the end, it's got this bullish divergence, which is really just showing us that it's come down really hard and fast into that preceding low. We have a bit of a retracement, which could be the 4th wave, or, well, I'm not going to get into all that. It's kind of irrelevant. Just the fact that we have this typical strong and fast low, which by the end of the day, it had rejected straight back up out of this area. So we know that this is a really strong area for support already. Straight back up, rejected down with increased volume. So a lot of volume on this big down bar sell-off. And then once we got back down into this area, you can see how it had a really hard time here moving lower, especially on that next bar, which is a narrow range churn bar. It's actually a 2-bar pattern preceded by that big climactic type of a sell-off. And this is really what we want to see at the end of a move, and especially at the end of a large corrective wave like this, corrective pattern of waves. And what happens on that final bar last week, Friday? Well, it's a doji, but it's closing up in the upper third of the bar after having rejected all the way up and out of that lowest low, which is pretty much right at 3,800. So that's a kind of psychological area, if you will, but that's neither here nor there. Those are all over the place. You could say every number is a psychological number if you wanted to, or every, say, 100, and you can see how close 38 is to 39 to 4,000. So that's whatever. The main thing is that it's hit the bottom of the big giant upsloping channel and the bottom of this downsloping channel, making a perfect looking corrective pattern. So once again, if it is going to go up, this is really about the best spot that you could hope for. It's actually turning up pretty fast now. I was afraid of this. Yeah, that looks like your first high or low there. Yeah, we might get lucky and see it come back down. Let's just start from this min 6. So this is the largest minute chart in our workspace, and you can see it's min 6. It's 138 minutes, which may seem a bit strange, but it makes for 10 bars per day. So the next chart is the hourly chart, min 5. Min 4 is the 30-minute chart, and then we have the RTH 4, which is a 15-minute chart, just the day session only. Min 3 is a 10-minute. So the minute charts go up by multipliers of between 2 and 3. And what we're doing on these, why do we have so many minute charts? Well, on each minute chart, we're looking for these corrective patterns exactly like we see on that daily and weekly chart. And what I'm doing with so many charts is trying to automate this as much as possible, the process anyway. And I'm looking at corrective patterns that make up between 25 and about 110 bars. So yeah, this is actually a setup on the daily chart, 96 bars. So that's a perfect corrective pattern on the daily chart because it lies within 25 to 110 bars. So what I'm doing is calling this daily chart the operative time frame for this trade. So if I were going long now and expecting to hold above that B wave high, or at least back to the top of the downsloping channel, preferably, all the way to the top of the channel. It just depends on how much I'm risking on the trade relative to my account size and, how many markets I'm trading or how many trades I can be in at any one time. So if I were, swing trading multiple markets, then maybe I would risk, say, 0.5% of my account, and I could be in up to 6 different trades at a time that way, using between about a 4-hour and a weekly chart, something like that. But I'm getting outside of the topic at hand. So what I'm doing, using this logic manager, which is our newest addition to our software set, our master suite, is we programmed in all of the rules that find these kind of ABC style corrections within a trend, and then we will signal the bars on which we could have a potential corrective swing high or low. In this case, we have a potential corrective swing low, which I think was yesterday. Yeah, yesterday. So depending upon which chart that corrective pattern is showing up, in this case it's showing up on the 10-minute, that would be the chart that we call the operative time frame. And you can see here it happens to signal just the very last bar, which is not always the case. I mean, just looking back on the chart, I don't want to give you any kind of false expectations, but this is more typical, where you have, this is like a double 3 or something. It had its potential high here, and then it retraced a little bit from there, and then went back up to a new high. This is the new potential corrective swing high, and then it retraced from there, made one more high, and then it came down. So actually it finally came down from here after ticking out the high, which that one would show up on the 30-minute. So you kind of get the idea as to how this works. Depending upon which chart is the operative time frame, we'll set which conditions and charts are requisite for the confirming conditions, the confirming volume and momentum divergence signals, which are all programmed within this Bloodhound template on the row 2 chart. Okay, it's all within this Bloodhound template. All right, so because that is showing up on this one here, is showing up on the 10-minute chart right here, then we are requiring confirming conditions from this chart and the subsequently faster charts. So the Min 2, which is the 5-minute, Min 1, which is the 2-minute, RTH1, which is a 1-minute, and then the row 1, row 2, tick 1, tick 2. And I use this naming convention, Min 3, Min 4, Min 5, RTH4, because the starting value for the ES and, say, crude oil, CL, for the Min 1 would be a 2-minute chart, but for something like Bitcoin, it would be 20 minutes. Or the bonds, say ZB or ZN, would be 10 minutes. And then maybe instead of for a day trading workspace, you want to set up only a swing trading workspace, then rather starting with a 2-minute chart, you could start with, say, a 20-minute or a 30-minute, even an hourly, and then you would grow from there. And just to give you an example of how we set something like that up real quick on the website, which this is a new website that I've been working on, which I should have live this week. I've written out this article showing you how to update the charts, and then we have these tables that you can use to update the most recent values for the target minute period, which for most markets, the common futures is a 5-minute period, which is really the value of the Min 2 chart. I know this is getting complicated, but all of this is explained here. I basically just wanted to go over the most recent swing low we've had in the US equities and inform you that, you know, this is probably the major low of the year. So it's a good time to give you a heads up and give you an example, and then push this out so you guys can have a little bit of analysis from me. And then really for you members, letting you guys know that the new website is about to be done, and you'll be able to access all the new tools here shortly this week. And then all the downloads, installation, instructions, licensing. Licensing is a piece of cake now. So everything is up aside from, well, quite a bit of documentation needs to be moved over to this website, and I'm updating it as I go. But we have a new documentation section, and like I said, I'm adding rewrites, updated articles, you know, full knowledge base as we go. But it's taken a while, so I wanted to give you guys access to the new site and get everything updated so that you can be using the latest versions of what we have built out for you so far. So all right, let's get back to this. I know I kind of ramble during these, but I just really wanted to show you what's happening in the ES, because I think this is a crucial spot in the market. I wanted to get it out earlier, but anyway, I've got a lot going on right now. So okay, let's jump back into it. The way we do this is to update the market geometry continually on all the charts, identify the trend, where we are within the market structure, the wave counts, and the overall direction the market is headed, identify an established trend on a particular chart that's rather clear, and then wait for retracements, corrections. Identify those corrections, update the market geometry, and then wait for the areas to be met in the market geometry and the confirmation of those areas in the volume and momentum divergence. And then we enter the trade and trade from one area to the next. So after this V bottom, and we've taken out the most recent major structure high and then pulled back, beautiful corrective pattern. Then I work to identify the areas in the market geometry that I'm waiting for, which number one was this kiss goodbye line here. And then on the 5 minute, we have this beautiful, perfect downsloping channel by connecting the most recent swing highs. And before that even, I mean, you can just, well, once you get familiar with this and you're doing this all the time, this type of look is pretty common, where you have the high before the final high with kind of a rounded top, and then you connect the two with a median line set, and it just traces out the perfect upper and lower median lines that it just bounces back and forth through. And it all comes together perfectly at that low for a trade setup on the 10-minute chart. So the 10-minute chart is the operative time frame for that trade. And then everything comes together for the confirmation on pretty much all of the faster charts. The tick 2 even being the largest of the confirmation charts for this trade is a perfect 2-bar pattern, big selling climax on a tick chart, which is not that common really. Followed by a churn bar, very, very strong support coming in here. And once you get familiar with market geometry, these are the types of channels you draw all the time. You'll hear me say this continually. You draw to find the next low as you're turning up, and you've just turned up. You want to find the first major high or low. You connect from the high before the low to the most recent high, and then that gives you the channel for the next low. Not always, but often. So just looking back to the left, you don't have a lot of options in here. You have this tiny one, which we've, pretty much right away gone through. But you do have this one, and then if we broke through that, which we don't because the downsloping channel was so perfect on the faster charts, then you would have this one as the final area for that retracement swing low. But as we filled part of this gap, over half of the gap, and almost touched the high just before the close, and we get that big, strong, just perfect, clear demand coming in at that retracement low. That is the perfect look for confirmation for this trade. And then on the tick 1 even, you have a big churn bar at the final low. And again, on that 5 minute and especially the 2 minute, you've got just a perfect down sloping channel, which I'll just draw a standard trend channel that ends on a 2-bar pattern. Another strong indication that there is major demand coming in at this low. So you have a ton of supply, big sell-off, as unfortunately the majority of the public are going short or getting stopped out right into the next major low, as especially as people tend to put their stops behind swing lows. So pretty often when you break a really strong low like this one is, a V bottom, or at a high, a V top, you tend to get a lot of volume that comes in as those stops are filled. And if it's right at an area, then those stops are getting filled as it's pushing right into the next major area for reversal. And the big boys are just sitting there with their bag open, collecting all those trades and building a big long position. And of course, we want to get in on that and get in as close to the area as possible so that our risk can be as small as possible and we can get a decent move out of this. So if we're looking at it and we're thinking about getting long, where would we trade to? We have the average range on all of the charts. This is a 50, a 100, and a 200. So if the trade chart, the operative time frame, is the 10-minute chart, then the stop needs to be at least the largest of the 3 numbers. So 38 ticks. Let's say that we got in pretty close to that area there. And where is it? Goodness gracious, I got so many hotkeys. Okay, here it is, the risk reward meter. Let's say we got in not quite at the low right there, and we want the stop to be at least 38 ticks. So let's say we put it at about 40 to allow for a bit of a throwover. So that means that our targets, let's say we just had 2 targets. And our minimum target, at the very least, we can expect to trade back above the high, right there. So let's say we just take one off when it breaks the high, which is not something I would do in this case because it's such a strong push. But let's say that's what we did. And then we have the channel, which I would update to the highest high. And then, then we have, sorry, I've just changed my hotkeys around in an attempt to make them more usable, but I haven't gotten used to them yet. So the first area really would be that trend line from high to high. And that's really my target. That's the safe target. Because this channel is so steep, and this is a 10-minute chart, we're already well into the morning. Yeah, I wouldn't risk trying to make all the way to the top of the channel in the same session. Maybe if I were holding overnight, but we still haven't had a very strong retracement after that V-bottom up. So we've just had a very shallow retracement, and that's sometimes all you get. So I mean, there is a risk of completely missing out if you were to close the trade, but that's always the case. You don't want to get sucked up into FOMO, fear of missing out. But anyway, take the trade and take your targets and don't get greedy, because look at the reward that we have on this trade. If I were just trading to the first target and even taking one off on a break of the high, I'm still over 5-to-1 reward to risk. And that's really, really good for a system like this, where your reward to risk is so high on average that, even by the time you tally everything up, you're still expecting to make over 2 times what you're risking when all of the losses and wins are all factored in, which is pretty exceptional. You may not have a very high winning percentage because the reward to risk is so high. So the higher the reward to risk, the more money you're making on every winning trade overall, the lower your percentage win rate's going to be. So people just seem to look at the winning percentage, and I think that's how a lot of people get sucked into these just garbage systems where the reward to risk is upside down. You're risking more than you're trying to make, and then you do the percentage winning trades to break even calculation, which is a very simple calculation, and it goes like this: percentage winning trades to break even equals stop loss size, actually, divided by the profit target plus the stop size multiplied by 100. So let's say that you're using a stop that is, whatever, let's just do 100 ticks. So stop equals 100, but your profit target equals something like 160. Then you've got 100 divided by 100 plus 160, and then all that multiplied by 100. So it's pretty simple. So we've got 100 divided by 260. Because your profit is larger than the stop, it's not twice the size, but it's 60% larger, you only have to have 35% winning trades to break even. What did I say? 38.5, I meant to say. 38.5% winning trades to break even. Now, if this were what I call upside down, and your stop were 160, which really becomes, 161, 162 when it's a stop market. Now you've got something a bit different, where we have 160 divided by 260. And now you have to have 61.5% winning trades just to break even. So it's pretty obvious that when your stop is larger than your profit, your percentage winning trades have to be a lot greater. And there are a lot of systems, or let's say there are a lot of people out there marketing systems that have this kind of upside down risk to reward ratio with really high winning percentages. And that seems appealing to people, I think, when you don't really understand all of the trade metrics, which, for heaven's sakes, if you don't understand all of the metrics in your trading results calculations window in NinjaTrader, I mean, there are quite a few more. Like, you need to understand what expectancy is, R multiple, percentage winning trades, together with the profit factor, the win-loss ratio, and the average size of your winning trades, average size of your losing trades. So all of those taken together tells you what you need to know about the system, not just the percentage of winning trades. That by itself is literally meaningless. So when you're trading like I am, and your stop is usually about 1/4 or 1/5, oftentimes it's about 10 to 1. So it's about 1/10 the size of my profit target. That's when things get very interesting. And your percentage winning trades don't really need to be much over 36, 37%, really less. It's more like 32% is profitable. Just to give you an example, let's say my stop is 100 and then my profit target is, let's just say it's 250. So divided by 250 plus 100, 350 times 100, 28.6% winning trades to break even. So I may be right on the trade, meaning have a profitable trade less than 50% of the time, but I average about 43% winning trades. But by the end of the day, my realized R multiple is right around 2. Sometimes it's closer to about 2.5. So that means after all the winning trades and losing trades are factored together, I'm still making on average 2 times what I'm risking. And that makes for a lot easier growth curve to manage than one where you're required to make 65, 68% winning trades just to break even. That means you've got to be right 75% of the time just to make a little bit of money, closer to about 80% of the time for it to even be worthwhile. And that is very, very difficult to achieve. In fact, I don't know anyone that actually does it that I've seen the results for. I've seen 70, 72% winning trades and the guy was making money, but that's money hard earned. That's not an easy way to trade by any stretch of the imagination. Scalping to me is the most aggravating, stressful, just nightmare of a way to trade. I can't stand it. And if that's you, you might need to look in the mirror and see, exactly how you feel about risk, how you manage risk. Maybe it's exciting for you, and trading really should not be exciting. This shouldn't be exciting at all. Now, granted, you can't help but feel certain emotions when you have multiple winning trades. I think we all kind of succumb to that and can feel a little bit cocky, sometimes arrogant, but that quickly fades away once you go through strings of losses. So having emotions, yeah, of course we all will. Managing those emotions, or let's say managing your reactions after experiencing those emotions, that's essential. You have to be able to keep from making those 5 or 6 different major mistakes that totally destroy your account, adding to losing positions, moving your stop loss after you've entered the trade and it's going against you, tightening your stops too fast, taking profit too early, taking half off way too close, and then going for a quote unquote runner. Doing the math on those sorts of things, it doesn't look the greatest, because every time that you're taking half off early for what you think is a risk-free trade, there is no risk-free trade, first of all. Your risk is whatever you have initially on the trade. Right when you enter it, whatever risk you have on that trade, that's the risk for that trade. It doesn't shrink over time. That's ridiculous. How many times will you close half of the position only for the trade to turn and then be stopped out? And then how many times will you just be stopped out without even ever hitting the first profit target? I'd have to draw it out for this to make sense, but doing that, you're only ever allowing for your maximum profit to be about half what it could be on your winning trades. And that's not a great thing. So if you're taking half off, once you get to 1-to-1 reward to risk or something like that, the math on that just doesn't add up. Not a good thing to do. But anyway, that's in the training material. I'm not going to try to see. That's my problem. I'm doing way too many things in this video, trying to make this a kind of all-encompassing, give you an update about what's going on in the ES, which is now way too late for you to do anything about it. Show you what I've been doing on the website a little bit, let you know that the updates are coming out with a new website, new documentation, and have this be a kind of introduction to the way that we trade. And that is just way too many topics for this one video, but there you have it. That's what I've done, and I've put too much time and effort into this video to stop it and not complete it. Forgive me, this is a bit ridiculous, I know, but at least it's something. Better than nothing, right? All right, let's keep going. One other thing we would want to do when entering long and then determining which are the areas that we're trading to, we would want to go back and look at some of the larger charts and see if there aren't any downsloping areas that would be coming in and around these areas that we've identified on the entry chart. So let's go back to, say, the min 4 and then see if we don't have any downsloping areas. So just going back from the major high to the left, this is the first major low. So that comes in pretty quickly there. That's about where my first target is anyway. And then for the previous session, I'd say that's the major low of the day after the open. So yeah, we hit that pretty much perfectly, but on the tick chart, I'm pretty sure it's even better, right? So just connecting the most recent major swing lows, it's not a downsloping area, but it does give us this upsloping upper median line. So we do have a couple of really strong areas that are coming in sooner than would be the upsloping channel that we're actually identifying here on the min 3 as a potential area. So the fact that we do have those major areas coming in sooner than the top of that channel just adds to the case that we should be exiting on a touch of this upsloping trend line from high to high. So again, we do have multiple areas coming in there at that second target. So all right, let's say that we've got everything drawn on our charts. We have the areas identified for the entry, and we've identified what are the confirmation signals. I mean, that's really clean and clear, that big 2-bar pattern on the 2-minute chart, and then that 2-bar pattern on the big tick chart, the tick 2 chart. You have a normal churn bar there at the low on the tick 1. So it sounds like a lot to handle, right? Well, thankfully we have all of this programmed in these Bloodhound templates where I'm accessing all of the signals from the logic manager, from what are called the logic agents on those minute charts that are marking the potential ends of corrective patterns. And you can see there is the green little line there. That's the logic agent here, which signals to us when there is a potential end of a corrective pattern, and it will display here in real time. And then of course you can do a lot of things with this thing. You can snap the chart directly under your cursor, which is to say bring it to the logic manager here. But when it's maximized, it's going to bring it exactly the size that it is. So let me give you an example of that. What is that? The min 6. So I'd click it here and it would bring it to the logic manager if it were on a different window or a different workspace and it were hidden, or if it were minimized. I can bring it and send it back like so. Okay, so this governs all of the logic for those corrective patterns, which the logic agent is displaying in the sub panel, the same panel as the divergence analyst. And those are some of the conditions that are built out within this Bloodhound template here for the different trade types. So you can see each one of these is accessing the logic agent from whatever chart it's saying, the min 6, min 5, min 4, RTH4, min 3, min 2, min 1, RTH1. And then together with the volume and momentum divergence confirmation signals. So we have the momentum divergence here, we have the 2-bar patterns, the density climax signals there, the standard churn bars, extreme churn bars, and then here the volume divergence. So when all of that comes together, just the logic agent signals for the end of a corrective pattern, potential end of a corrective pattern, together with the volume and divergence momentum confirmation conditions, that would paint a signal on the upper portion of the chart, the same panel as the price panel. That's what that green line is. So on these 2 bars, we have all of the confirmation conditions coming together for a potential end of a correction on the Min 2 chart and the Min 3 chart. And then in the sub panel, we have the market geometry confirmation bloodhound template, which is requiring that a bar be very close or touching at least 2 different areas on 2 different charts in the market geometry or a yellow colored trend line. Okay, and then when both of those come together, as they do here on that exact low bar, then, and see this is the row 2 chart, so that's the chart with the bloodhound templates for momentum divergence and volume confirmation with the operative time frame conditions and the market geometry confluence template. And then when both of those come together, the signal in the market geometry and the confirmation signal, then on the row 1 chart, it will plot the potential trade. Okay, so just because you see these signals on the price panel on the row 2, like for instance back here, that doesn't mean that that is a trade setup. It just means that if you also had the areas in the market geometry, then you would have a potential trade setup. Okay, but without the signals in the lower panel for the market geometry, the signals in the upper panel, the price panel, are null and void. At best, you could use them to help for exiting a trade or for trade management, maybe tightening your stop or tightening your targets. And then we do have some Blackbird templates that I've programmed out for trade management, but I think that's beyond the scope of this video. I'm going to end it right here. So again, I just wanted to give you guys an update about the ES. I'm sorry that it's taken so long for me to finish this video. I've had multiple things come up in the new website trying to get everything finished up, and I had to put the rest of the editing on hold yesterday. So I'm finishing it now, and hopefully I'll have it up on YouTube here in a moment. See, unfortunately, it has already taken off to the upside. Man, we had a perfect setup there the very next day too, though. A bit early. Yeah, it's pretty early. But anyway, everything came together right there as well. But again, I'm going to stop it here. Hopefully this gives any of you guys that are interested in joining us a little overview of how this all works. I know it can be quite overwhelming, but I've tried to make things simple, and simple just doesn't make money over time. Obviously, you don't want to overcomplicate, but the markets are a pretty complicated beast. And the journey of finding anything that actually works and that you can prove works well enough to be consistently profitable, that is one long, arduous journey. And I've done it, thankfully, but it's not been easy by any means. But according to some of our members, after going through, like so many people do, 10, 12 different systems and spending a small fortune on all of these indicator software, trading suites, methods, systems, automated systems, 99% of which you can literally just throw in the garbage, they've finally been successful using these methods. And I think the market geometry really is the backbone of this system, together with the way that we're using the relative volume on non-time based charts for the confirmation with the momentum divergence. This is really the best that I've been able to come up with so far. Eventually we will add in, not too distant into the future, quite a bit more functionality into the volume analyst, incorporating bid-ask data like we've been saying for so long. But now we're getting to a point to where we can start to get back to that now that we've finished the first version of this logic manager. I think you guys are going to find this pretty useful and experience some increased performance. So it's all coming. Just give me another couple of days and I think I'll have everything up on the website and the new website active so that you guys will be able to hopefully work a little bit over Memorial Day weekend. I may not have all of the documentation moved up. Well, there's no way that I'll have all of it, but I think I'll have enough for you to get installed and start to get everything set up, if you don't have anything planned for this weekend. So, all right, I'm going to leave it there. Thanks for watching. Talk to you guys soon.